Good afternoon, everyone. We will get started as it's 12:30. So I'll start the recording and we'll get going. So let me just click around and right, off we go. Hello and welcome to this week's webinar. If you're watching the recorded version of this, it was held live on Wednesday, March the 7th at 12:30 in the afternoon. So this is a webinar that we do every week on a Wednesday lunchtime. It breaks down into a couple of parts. We look at the major markets. So we look at euro, pound, we look at the major indices, the S&P, the DAX, the FTSE, and we look at gold and oil, just to see really what the levels have been over the last week, what's been driving the market, and some of the levels and some of maybe the opportunities to look out for in the days ahead. It's a busy week this week, and we've got the European Central Bank decision tomorrow, Thursday, 12:45 UK time, but it tends to be the press conference after that from 1:30 UK time, where we see maybe more volatility. Then, of course, this Friday, on Friday at 1:30, we've got the non-farm payrolls, the US unemployment numbers. It's always a big one. It's a week later. This time it's normally the first Friday of the month, but because February is a short month, it often slips to the second Friday in March. So that's this Friday, and I think the expectation is for 190,000 jobs to have been added in the US economy during February. So we'll see how that pans out. But normally lots of volatility when that number comes out Friday at 1:30, and we can often see in the run up to it maybe something of a quieter market as everyone waits to see what happens. But we'll see. You know, with that European decision tomorrow, the central bank interest rate decision tomorrow, we could have a bit of volatility anyway off the back of that. And also, as part of the webinar, what we do a little bit on trading strategy. So we'll be doing that today, and that we're looking at the RSI this time round. So let's get cracking. So we'll start off. This is Aondo's trading platform, Trade Hub. So Aondo may be better known for follow trading, copy trading, social trading, that sort of stuff. But of course, you can also do your own self-directed trading. And so for those of you who've traded before, this sort of platform will be pretty familiar to you. I think let's start off with US markets. Let's start off with stock market indices for a change. We saw a big move last night in out of hours in the S&P. Let's just maximize that. And I do think, I think this is the really interesting markets at the moment, US markets or stock markets full stop, because of the volatility. So that was the move last night. I was actually short, so I was very happy with this, and I'll go through why I was short in a minute. I've not actually caught up with what caused that move, but it was in the after hours market, big sell-off, and maybe somebody who pays more attention to this stuff than me knows why we saw such a big move last night. But I think it was in. I mean, the reason I went short, it's the stuff that I've been talking about for ages on here is just looking at big levels. We'd seen the market struggle earlier on with the sort of the 27, 32 to 33 area, so it was really just picking up on the resistance. So if we pick up on in the overnight market, so 11:30 yesterday morning UK time, the market traded up to sort of 35, and then we had a few moves after. We had a move on the open up that traded as high as 33-ish, 32.5, and basically so it sold off. It sold off down to 27.12. So we saw a good 20-point move in the S&P by 5 o'clock UK time. So I thought, well, if it rallies back up to here, I want to be short with a stop up above there. So I had an order in to sell 29.5, and I got filled sort of here when it traded as high as 27.30.3. So I had a stop loss up at sort of 36, 37, I think. Went nowhere, and then it was really here 11 o'clock last night. I fell off a cliff, so I moved my stop loss down and came out for a profit at 27.01. I think, but yet again, I think the importance of, I didn't know I was going to do that, obviously, but the importance of previous days or the days high and low, playing out again. But let's look at the dailies. I think it's interesting, because of the volatility. Let's put an RSI on here as well, because we are going to be talking about that a little bit later. So let's just plonk that on the chart. Our relative strength index is going to go up on the chart here. So let's do 10-day RSI, and I'll explain a little bit later what that is. Given the volatility that we saw during February. You know, I think as I've said over the last couple of weeks, I don't think we're going back up here anytime soon. I don't think we're going back up to these all-time highs anytime soon. And this sort of move would be exactly, I think, what I'm expecting for the next few weeks. You know, I think we're going to see choppy markets because clearly what happened here has really spooked lots of investors. You know, when the markets fell so heavily, volatility went through the roof after we'd had what felt like months and months and months of markets just grinding their way higher with low volatility. So I do think it's a good market for trading, chop, 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 big swings. But maybe, you know, we're going to be pretty directionless, I think, for US markets. And so far, that is panning out. But going into this afternoon is going to be interesting after that big move in the after hours market last night. And let's take a look at it. Let's take a look at it on the hourlies and see what it looks like. It looks like, you know, it's clawed back a big chunk of those losses. But I think, you know, maybe some of the levels to watch going into today, that was the move on the hourly chart. You know, let's just see what happens. If we continue to push above the overnight high, maybe we will see more of a recovery. But again, you know, look, it's a level from back here. You know, it's all, for me, it's always all about the level. So from the beginning of March, 3 o'clock on March the 1st, we saw the market trade up to whatever that level is, 27.30. Okay, it did have a look through yesterday in the out of hours market, but it's a real problem. So I think if we saw some strength in US markets over the next couple of days back up to this area, I think it does look like another selling opportunity, because these are, you know, and on any weakness at the moment, I think because markets are quite nervy, you can get pretty vicious sell-offs. You know, saying all that, clearly we've had support left from way back down here, 26.20 on Feb the 12th, more recent support from March the 2nd coming in at 26.47ish, 46, that sort of area on the S&P. So I think we've got some really interesting levels to watch. But like I say, that from an investor's point of view, I think it's going to be difficult the next few weeks, maybe even longer than that, as these markets just chop around and maybe try and get some confidence back. I think clearly if we are worried about a bigger crash, the obvious levels to watch are the lows the market hit when it sold off so hard. So I think it's those early Feb lows. So on the S&P, it's about 25.30. I think if we went through those levels, you'd expect it to kick off a reasonable amount of panic again. But we're a long way away from it at the moment. So let's see what happens. Right, let's take a look at, just bring it back to the UK. Let's take a look at the FTSE 100. I think I said less. I hardly look at the FTSE at all anymore now. You know, because so much is just being driven by what's going on with these US markets. You know, so it's the US markets leading the world as usual. So there's our big crash off in the FTSE from middle of Jan, trading at what, 7,800 almost. It was plunging down to 6,900. So that's what, a more than 10% slide we saw in the FTSE. Some stability. These are daily candles that we're looking at. So over the last week, it's pretty boring, pretty sideways, but we are seeing some stability there. I suppose the argument is, if you wanted to do a long-term trade on the FTSE here, there's an argument for being a buyer with a stop loss under the lows. So a stop loss under 6,900. So we'd have, what, a 250 odd point stop loss if we're buying here at 7,148.5. But, you know, if you think the market is going to recover, there's an awful lot of upside. There's 700 points upside there if we're going to go and retest those old highs. It's maybe not a trade I'd do, but the setup makes perfect sense, where we've been down here, rejected, rallied up, come back, and we're sort of stabilizing again. But clearly it will be what US markets do that dictate what's going on with the FTSE. Let's take a look at the hourlies, though, because there's clearly some levels that have built up. And here we go again. I know I really do bang on about this, but you can't underestimate the importance of things like previous lows. And here's the perfect example. I think people spend so much time fiddling around with, you know, Bollinger Bands, stochastics. We'll look at RSIs in a minute, moving averages, all this sort of stuff. And they ignore just simple price action. And I look on the FTSE. So FTSE, March the 2nd, trades as low as whatever that level is, 7,060. Then March the 5th comes down to it and it holds. March the 5th again comes down to it and it holds, and we finally get a decent rally. We get the market moving up 130 points, and then this actually was late last night, so it was in the out of hours market, comes down to it again and it holds. So clearly for short-term traders, if you're watching the screen, You know, any weakness below 7100 is bringing the buyers back out. You know, so there's maybe an opportunity there for the short term. It does look like we've broken the back of this downtrend that's been in place, but as usual, it's going to be what do US markets do that dictate the direction for the UK. And one quick one, let's have a look at the DAX, the German 30, and then we will we'll talk a little bit about RSIs. Okay, so the DAX, that's interesting on the DAX. Actually, the DAX 2 days ago even had a look at its sort of massive sell-off low. So down at what 11,685 was the low, and on 5th of March it traded as low as 11,731. So it came within 50 points of that old low, and we've had a big move off that. So again, if we did see the DAX have a bit of a wobble over the next few days, watch these old lows. Let's have a look. I mean, the DAX is, you know, a pretty volatile market compared to other indices, which haven't exactly been quiet over the last few weeks, but it's interesting. So or maybe, you know, maybe the DAX, I suppose, making similar sort of patterns to the FTSE at the moment, where we've had the sell-off, had a move, and maybe it's broken that trend. So maybe we will see something of a recovery, and it does tie in, I suppose, with what we've seen in US markets overnight, a bit of a crash and then starting to recover. Let's see what happens, but it's all going to be about what happens in the US. Let's talk about RSIs for a bit. So I've got my RSI down here, so a relative strength index. Let's flip it. Put the Dow up. We never look at the Dow. Let's flip it onto a daily chart for the Dow. So the RSI is the relative strength index, relative strength indicator. I can never remember which one it is, and it's probably one of the most basic of the oscillators. Okay, so it's down here at the bottom of the chart, and if you're on the platform, you access it from up here. So it dates back to the 70s. I think one of the first indicators out there, and it's pretty simple. I've got a 10-day RSI here. I think that the textbook setting is 14, a 14-day RSI, but I use 10 because it's 2 trading weeks. And what the 10-day RSI looks at, it basically looks at the range of the market over the last 10 days. Then it looks at the days the market went up, and then that gets divided into the range over the last 10 days. So basically, you end up with a percentage number with the RSI, so anywhere between 0 and 100%. If the RSI is reading, for example, 90%, it means that the price is, you know, is in the higher zone of where it's been trading over the last 10 days on a 10-day RSI. And the way it gets used is that the classic way of using RSIs and many of these indicators, a reading above 70%, so that's the horizontal line here you can see on the chart, a reading above 70%, the market is said to be overbought. So basically the market's moved too far, too fast, and is due a correction. If you think about markets like an elastic band, you know, that trade around a median point, when the elastic band, it's basically when the RSI is above 70%, it's saying, well, okay, the elastic band is getting a bit stretched to the upside here. And then the flip side of that is the sort of yellowy line you can see down here, and that's the 30% zone. So again, a reading on the RSI below 30%, the market is said to be oversold. So the elastic band has been stretched a bit too much towards the floor, and the market's due a bounce back. So that's the RSI. So and there's another way of using it, which we'll come to a second. But the drawback, the big drawback, and this highlights it perfectly, actually, this Dow chart, if we looked at maybe this period back here in December, the problem is with the RSI, and I think any overbought, oversold type indicator, in a strong trending market, if you're sitting there squinting at your RSI for signals, it will get you to go against that trend too quickly. So here's a great example from back here. So 28th of November, the RSI goes oversold. So it's telling you to sell the Dow. It closed at what, 23,819 on that day. So it's telling you to go short at 23,800. What does the market do? Completely ignores the RSI and rallies up another nearly 3,000 points from where the RSI first went overbought. Okay, so this in a strong trending market, as you can see here for the Dow, the RSI will stay at an extreme for a long time, and the market does not give a monkeys that the RSI is saying sell. So maybe in an uptrend, maybe one way of filtering that stuff out, and we knew before the markets fell off a cliff, that they were in a strong uptrend, is to ignore the sell signals and just take the buy signals. And we've got to go back, we'll come to this bit in a minute, but we've got to go back all the way to April last year for the last buy signal oversold, where the RSI did dip very briefly below that 30% zone on the Dow and hooked, giving us a buy signal. Okay, so there's our oversold signal where the market sells off, and then we had it again here. You know, we had it worked pretty well here. I mean, I think I've been pretty brave maybe to buy in to that time in Feb when markets were absolutely tanking and falling off a cliff. But there's our oversold signal there. Okay, so that's one use of the RSI, this simple overbought, oversold. And of course, if you want to, this is a daily chart. If you want to, you could look at it on an hourly chart. You're going to get more signals. It's going to be a lot choppier. On an hourly chart, you're going to get a lot more signals, but there's no, you know, people will use them on shorter term charts as well. But I think a better way of using the RSI, and let's flip off this for a second, because of some of the extremes we've had in stock market moves, it's maybe not the best way to look at it. But I've gone on to, what have I gone on to now? Pound US dollar. So I think maybe one of the better ways of using the RSI is this idea of divergence. So what, just to explain what that is, I can't really see an example here actually, so it's a bad one to use. But what divergence is, if the RSI is just a calculation based off what the price is doing. So in the great scheme of things, if the price is going up, I've flipped this to euro dollar now. If the price is going up, the RSI should be going up. If the price is falling, like here, then the RSI should be falling. But it's when the market does one thing, but the RSI does something different, it can be a suggestion that maybe things are changing. Now, I don't have a perfect example on here, but what I'm going to look at is here. Okay, October last year for the euro. So it's not a fantastic textbook example, but look at what happens with the price. This ended up being a false break below 116, this move here, because the market then just took off. But if you look at what's happening, so the market is falling, the RSI is falling. So the RSI, let's bend the rules a bit and pretend that did dip below 30% for the purposes of this example. So the RSI has gone oversold. Market rallies a bit, RSI ticks up a bit, but then the market slips a little bit lower, and it does, you can see there, the low on that day there, November the 7th, does go below the old low. So the market has moved lower. The RSI, however, look at the shape of the RSI. So we've got a low for the market, extreme for the RSI, a new low for the market, but a higher low for the RSI. So this little setup here is known as bullish divergence. So the market slipped to a new low, but the RSI hasn't followed it. Okay, so the RSI, it's as if the RSI is trying to start an uptrend, even though the market is in a downtrend. So this little setup can be a suggestion that maybe the weakness is running out of steam. You know, as you can see, it doesn't happen that often. I'm struggling to find examples on this. We'll flick to some other markets in a minute. It doesn't happen that often, but there's an obvious way of trading it. If you want to trade divergences like this, so you get the setup where the market slips to a low. This is a daily chart now. The obvious way of trading it, buy the next day, so buy after we've had that setup, and put a stop loss underneath the most recent low, because by definition, if this is true bullish divergence, the market should not take out that low. If it takes out that low, then this pattern is invalidated. But it does make sense, this idea of divergence, because it is basically the market running out of steam. Even though the price is continuing that trend, it's maybe not continuing it with the same velocity that we were seeing before. So I think that's definitely one way of trading it. Let me see if I can find bearish divergence. Let me flip over to gold. Then we'll look at these markets properly. So bearish divergence is really the flip side of that. Oh, here we go. It's a bit of a rubbish example actually, but again, okay. It took a while to play out this, but let's just walk through what was happening with gold. So December, we had this massive run in the price of gold from about $12.36 an ounce and just runs up. So we get to a level here, January the 4th this year, hits a high and turns. The RSI, understandably, is very overbought because the market has rallied so hard, but we don't have any divergence yet. Market sells off, pushes higher, RSI, this is the setup. So this is bearish divergence. Market pushes to a high, pushes higher still. RSI is making lower highs. So it's like the market is doing a downtrend. Sorry, like the RSI is doing a downtrend. So if you just sold here with a stop loss above that high, you'd have been stopped out. Okay, it was a losing trade. The market went on to push higher again. But look what the RSI is doing. Yet again, can I draw trend lines on the RSI? Let me have a go. Just to highlight this a bit more. Can I do that? Can I do that on here? No, it's a quick answer. Okay, so the RSI makes a lower high, so we've got almost triple bearish divergence. So again, the approach would be sell short here, stop above the high, and the market did actually sell off a decent amount after that. But so that's the setup. This divergence thing doesn't happen that often. Doesn't happen anywhere near, of course, as the overbought, oversold doodahs happen. But I think it can be quite a powerful extra confirmation, that maybe if you're going to go against the trends, then maybe now is the time to do it. I have to say, I think, as I said before, I don't look at lots of indicators. But, I trade just looking at levels and support and resistance and trend, but I will notice RSI divergence if it pops up. So when we have it at the lows, like we did in that Euro chart, bullish divergence, suggesting maybe we're due a bounce, then we have it up here. It took a while to play out, but bearish divergence, where the market is pushing higher, but our RSI isn't. So I think there was an interesting example there. Let's go back though and look at these markets properly. Now we've done the RSI a little bit. Let's go back. Pound US dollar. It's still, I'm sure it's still pretty much Brexit driven. Clearly we have various bits of fundamental data that come out for the UK, but last week the story was all that Northern Ireland border discussion stuff that was going on. You can see on the dailies that did clobber the pound last week. It was under quite a bit of pressure last week. Pound US dollar, we lost a lot. We lost a good 300 points or so in 3 days, pound US dollar, on all that stuff. But it hasn't changed the bigger picture. So me, I still think we're going back up here at some point this year. 145-ish, 143, 145 up there. The trend for pound US dollar is most definitely up. For me, it would take weakness through probably this low back here from the middle of January, around about 134.40-ish, to suggest that trend was changing. But for now, any weakness still looks like a buying opportunity. Saying all that, we do have this correction that's been in place now for since when? When did that happen? 25th of Jan. So we're 5 weeks or so into this correction. Let's take a look on the hourlies. So let's have a look what that looks like. Can we go back far enough? Yeah, we can. So let's pick that up on the chart from right up on the extremes up here. And it has been textbook, this move. Look at that. I mean, it's a fantastic example of a downtrend. We've had 2 touches is when we can start drawing the line. Then it's the 3rd touch that confirms it, and bang again, February the 26th, rallies back up and sells off. So it's still within that downtrend. So I think I could really do with the market up here for an options trade I got on, but at the moment, it's a real barrier. So at the moment it's coming in about 139.75. So it's a real barrier here. But it's interesting to watch how this plays out over the next week or so. Do we finally crack this downtrend? Because we do have, of course, a little uptrend chugging along so far for March. So we've got these conflicting trends at the moment. And even though I want the market to go up from here, you'd have to say, you have to default to maybe the bigger trend, and the bigger trend at the moment on this chart anyway is that correction that's been in place for 5 weeks. But I suppose there's an argument, if you were trading it now, to be a buyer now, within this little trend, again, an aggressive trade. We're a buyer now at, where is it, 138.72, and a stop loss under the lows from 9 o'clock this morning. So the lows from 9 this morning were about 138.46. So we're a buyer at 72. Let's say we go 138.30 stop loss. So we got 42 points risk if we bought it and put a stop loss down here somewhere. But it's interesting to see how this plays out this afternoon. But we do have the payrolls on Friday. Normally, plenty of volatility for the dollar off that. So let's see how it leaves these trends. But I think that's an interesting little conflagration, or whatever the word is I'm looking for, of trends, where we've got this correction that's still in place. Big picture is still up, and it is sort of still chugging into this uptrend for March. So that's pound US dollar. Let's take a look at euro dollar. Euro dollar has been interesting. It's not been that volatile, but I think what is interesting is how levels have held. My favorite subject, trading off big levels. Let's just look at the big picture thingy-majiggy for the euro. Looks something like that. So again, euro dollar is in an uptrend, big uptrend. I think what was interesting last week, not last week, sorry, middle of Feb, we had the move out to fresh 3-year highs, but it turned around on the day, and it turned around pretty quickly. Then towards the end of last week, we came back to this area. There's really obvious support for the euro at the moment. The lows from the middle of Jan were about 121.65. Last week, admittedly, it did punch through those lows. It went to 121.55. So it slipped 10 points through the lows on March the 1st, which is last Thursday, wasn't it? So it did slip through the lows, but it turned around again on the day. It rejected those lows down here. Let's just pick those up. Rejected those lows really quickly. So again, any weakness in euro dollar back to that 121.50 area looks like a buying opportunity. And this week, since then, we're just off to the races again. But again, the big levels to watch on the upside are still, or this sort of zone, 125.30, 125.50. That sort of area. It's really trapped at the moment. But maybe, well, we'll see what happens. But if we get a breakthrough here, maybe that's the break that does start the next leg higher. So I think, euro dollar is still pretty bullish. If you're trading off a daily chart, any weakness below 122 looks like a buying opportunity. At the moment, it's somewhat in the middle of the range. But it's an interesting market to watch, and just watching how those levels perform. Let's take a look on the hourlies. Are we getting much on the hourlies? I suppose, it has broken that downtrend. It's got this new uptrend, a bit like the pound that it's been in for March so far. But it's an interesting one to watch. Let's do one more currency, then we'll take a look at gold and oil. Let's just do a quick look at euro sterling. We do sort of dip in and out of this now and again because it has been pretty dull. It's still dull. This is euro against the pound. I did see, I think there was news yesterday. I think that's why I thought we'd look at it. It was at its highest for the year, the euro versus the pound. But what is interesting, it hasn't changed. It hasn't changed that the range it's been stuck in. So arguably, the trade here, because we're moving back up to the top of the range. Maybe if it squeezes a bit higher the next day or so, arguably the trade here is to be a seller of the euro versus the pound. Because 0.9040-ish, let's say 90.50, let's round it up. We're 100 points away from that at the moment. There's been a big barrier. So I think it'd be interesting to see how this pans out with the interest rate decision tomorrow. Do we get a squeeze higher and a bit of failure? Because it has been such a massive barrier for euro pound. And down here, we haven't gone overbought. It's been so quiet. We've not really hit an extreme on the RSI at all this year. We had big oversold down here in September, but really dull this year. But let's see what happens. I think euro sterling, maybe, we start to roll over again, because it's been a massive barrier all the way back to October. So we're 5 months stuck in this trading range for euro sterling. Let's see what happens. We'll come back to it next week to see where we are. And the last two we look at, gold and oil. Gold, what can we say about gold? I think if you do watch gold, I think the real big chart that matters is the bigger picture view on gold. So actually you could go back to there, but let's look at the last 2 years or so. So this is a weekly candlestick chart. So July 2016, summer of 2016, the price of gold trades as high as 1375 and then sells off a chunk down to 1120. Then September 2017, price of gold gets up as high as 1357. So this whole 1357 to 1375 area, it's been a real barrier for gold, and it's been the case this year. Someone's saying they can't hear. I'm assuming everyone else can hear. Let me just reply. We're nearly finished anyway. Hang on, there we go. It's been a real barrier, 1355 to 1375, and it's had a couple of goes and it's dropped back, but it does feel as if it is gearing up, I think, for a move through here. It hasn't done it yet. Let's look on the dailies. So again, it's pretty much trapped in a range. 1300, big level for gold. It sold off last week. hit it again 1st of March last Thursday, traded as low as 1303. So 1300, so low 1300s is a buy, and then up above sort of 1360 is a sell, and it's just trapped a bit like the euro, trapped in something of a tight range. So it's a fairly inconclusive, I think, at the moment. And then finally, let's take a look at crude oil. So crude, I think this is an interesting market. Crude oil. Let's I think the big I still be bullish on oil, even though it's come really far since last summer. So last summer it was trading at $42 a barrel. Is it this year? This year we've seen it trade at $66 a barrel. So we've seen a 50% move in what, 6 months or so. Oh damn, I've drawn that wrong, haven't I? The trend is clearly up for oil. So let me try and draw this again. Oh, I'm a bit of a disaster today when it comes to drawing lines. Let's just plonk it in there. There we go. That'll do. So there's our trend line from the summer for oil. You know, we've got big support coming in just above 58. 58 has been the low for the year. I think $58 a barrel has been a big level. We had this sharp correction, but it's performing exactly how you would expect something to perform in an uptrend. You know, we get the sell-offs, buyers come back in and push the price back up. So for me, the obvious sort of medium-term target is a move back up to $66 a barrel. Let's take a look on the hourlies and see how that looks. And I think it is only if we start losing 58, and what good support that was. 3 days it just banged that 58 level, then rallied. Similar thing, March the 1st comes down to nearly 60. March the 2nd comes down to 60-ish again, same sort of level. Great opportunity, you know, low risk trade, bang, 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 bang. And up we go. So for me, you know, oil is still bullish, still looking to buy the dips. And again, hopefully that demonstrates, like the S&P trade did yesterday, how important big levels are. Previous days, highs and lows are pretty important. So what to watch? I think stock markets, as usual, because of the volatility. The volatility continues. Got clobbered in the overnight market yesterday, the S&P. Maybe we'll see these markets claw their way back up, but I do think the theme is going to be chop, chop, sideways for quite a few weeks now. So that's an interesting market to watch. Euro sterling is interesting. If we take the dollar out of the equation, euro sterling is interesting because it's wherever it is coming to the top of the recent doodah, the recent range. This is a weekly chart we're looking at, and tomorrow we've got that European Central Bank decision, and also on Friday we have the payrolls. So I think there's plenty there to be keeping an eye on. Right, we're going to wrap things up there. I'll let you get back to your afternoon. If for the person who couldn't hear some of the stuff, there is a recording available that'll be ready in about half an hour. You should get an automatic email, so you can. The recording clearly will have the sound for the bits you missed out, so you can watch it in there. We'll wrap things up there. Thanks for coming along, and we'll do it all again next Wednesday.